Hello, hello. How is everybody doing today? This is Big Chonis. Hope you guys are having a good Saturday. It's been a week or so since we have last spoken, and I think it's definitely high time we discuss what an amazing week this was. Definitely want to get right into it. Remember, guys, hit that thumbs up button if you enjoyed my content. Please also subscribe to my channel. Remember, you guys can follow me on Twitter. I am at Big Chonis. I don't really have anything to shill today, but if you do want to support the stream, we got some affiliate links in the info area there. The only thing I will shill is just remember to keep it clean, wash your hands, wipe down things, and try and take care of the ones you love. Listen, this was a tremendous week in really all markets of history. Um, Looking at this Bitcoin chart here, it's just amazing what has happened this week. We still have almost 2 more days left of this current weekly candle, and it is one of the worst ones historically that we have ever seen in Bitcoin price action. We can look at just from a pure percentage standpoint here, from our top of the week to our lows of our week so far, this was a 50% drop. Talk about the halvening coming in May. This was a price halvening for sure. And just look at this volume we saw. I'm on Coinbase here. Something that is basically challenging our late 2017 volume prices, which volume history, which is just incredible to think that we have revisited that kind of immense volume in both directions once again. There's a shit ton of charts I want to look at here. I'll try not to ramble on too much, but I do appreciate you guys joining me today. So let's get into it. All right, so let's talk a little bit about crypto Twitter for a moment here. I just actually 2 days ago was my 2 year anniversary on crypto Twitter. And listen, crypto Twitter is definitely fun and can be a great resource. But remember, I think what this week has taught us is that no one knows anything. No one knows what's going to happen. There's all sorts of technical analysis we can use. We can use indicators and oscillators to get a sense of where the price action currently is, potential areas of support and resistance. But terminology that we sometimes use, and I even use it too, about what is strong support and strong resistance, what could never be achievable. I think all that really needs to be thrown out the window, because let's face it, anything is truly possible in the price action of Bitcoin, and we've clearly seen that with our overall equity markets as well. What's going on? SS Swartz 88, always count on you to be here for my live shows. Christian Bettinger AG, what's up? Giova, Nej D, CCK, Huggish. How's it going, guys? Really appreciate you guys hanging out with me. If you guys are in the chat room today, just say hi. I'd love to hear from you. So let's start with our weekly charts here. Let's start with our weekly Bollingers. There's a bigger chance that we could be closing below our lower Bollinger. We did that back here in November of 18. We did pierce it in October of sorry, of 19. We pierced it also in October of 19. And then prior to that, it wasn't until kind of our bottoming area here in late December of 18 where we had actually closed below it for several weeks here. So definitely something setting up here where we could be testing that once again, where we could be finding lower Bollinger resistance rather than support. And that is definitely something of note. Now, our Bollingers on the weekly, they're still very wide. Remember, we like these to tighten up to basically define a more meaningful trend move. We were relatively tight here. Our trend broke bearish. We got very wide. We tightened up here, and our trend broke bullish. And now we are still very wide here, which tells me we have a significant amount of more time before we can establish a more meaningful and sustained trend direction. The volatility has pushed these wide, and which gives us a tremendous area of price action to move through. Please note, when we closed last week below middle Bollinger support on the weekly, and then back tested it and rejected it literally almost to the penny. We didn't even get up to it on the highs of this week. It was very notable that this was going to be support right here, turned resistance in a nasty week of candle we had last week. And the back test did fail to break through. So that is a very clear sign where the Bollingers, especially the middle BB, and this is historic. We've done this many times. Failure to break above middle Bollinger has caused a touch of the lower BB, and it has done so once again. I want to keep the Bollingers up, and I wanted to go to our monthly chart. The lower Bollinger on the monthly, and I did check this on the BLX, which gives me all the way back to 2010 price action. Remember, the monthly Bollingers in the BLX didn't really start till like 2011, 2012. Hey, thanks, little Chonis. I appreciate the tip. Remember, guys, tips are always appreciated, but definitely not necessary. What's up, little Chonis? Darius Souza, Medvevo. Pat Can, hey buddy. Robert, Hugh Crypto, what's up, brother? Really happy you guys have decided to come join me today. I'm not out of the realm of possibility that the lower Bollinger on the monthly, one of our higher time frames, is definitely in play. And let's note where it is. It is right now at $2,200. And shit, we are not that far from it, historically here. Now, we did this kind of wraparound U-shape move here the last time, and not even close to our lower BB on the bearish market lows of 2018. But see how wide our Bollingers on the monthly still are. This is like a great white shark with its mouth wide open. No sense of tightening here at all. And as you can see, when we had a very tight Bollinger in the year 16 and 17, that expansion running up the upper BB could take place. So let's get back to our weeklies here. I do want to close out the Bollingers. I want to bring up my two favorite EMAs, EMA 12, EMA 26. Okay, and this is a very ominous sign here. They do like to dance around. We had a very bullish EMA 1226 pattern here. Here was our signal on the weekly here. Here was our bull cross. And if you had just rode that bull cross from, a little under 5K here, that was just beautiful as the EMA 12 acted as support all the way to 14 and basically held that candle support until right around that 10K break was starting to say, hey man, we might be losing this spread here. Also note how the spread, when these things start to separate really big and then really big here, the telltale sign. Now this works both ways. It works on the bullish side, it works on the bearish side. And on the bearish side here, they got too far apart here, and the price action got way below the both of them here. Now we have an extreme situation here once again where our current price action is significantly below both of our EMAs, and note our EMAs have bear crossed. And frankly, I don't know that this will recross bullishly anytime soon. We have lots of running room here below our EMAs. We have just started our bearish cross here after dancing on several circumstances for several weeks here. And these can definitely spread out in the coming weeks, pushing our lower EMA, the 12, much lower and spreading out below our EMA 26 here, our slower exponential moving average. So this is another very bearish signal here on our EMAs that we have failed to hold our bullish cross, and the bearish cross will probably be with us for some time. I want to jump back to our monthly here, and I want to note that let me go to let's see here, let's go to stamp, because we get a little more history with stamp. And I'm gonna just hide our price action for just a moment here, and we're just gonna focus on our EMAs. You can note we've really never been in a bear cross except for just a little tickle right here back in 2015, right? Where we just nibbled the cross there, but we didn't get very far. And then once we regained our bullish cross, we have been in a monthly bullish EMA 1226 cross since 2015. 5 years of a bull cross. You can see here we came very close to a bearish crossing, but we did not do that in April of 2019. And I have a I have a feeling that we are going to eventually, in the months ahead, get our bearish cross in our EMAs. The way they're both pointed and the speed that, especially going into April, our EMA 12 will accelerate down into our 26 and basically get that eventual bear cross. But that is significant of how overall bullish the EMAs on this highest of monthly time frames has been, and you can see it there on the weekly as well. Yeah, let's bring up our TD sequential here. So from a weekly standpoint, listen, this was another signal. We had a red 2 close below a red 1. This was last week, where your short signal basically was initiated. You had something similar here on the bullish side where you had a green 2 close above a green 1, and you basically had that 3 candle still hold intra-week price action above the 2. So you could have held your long trade here, and now you see this was a short trade signal on the 2 candle, and sure enough, that 3 follow-up was very significant indeed, showing that did fall through. We broke through a trend setup line here, and this could definitely be week 3 of a 9-week potential bearish count going down. We got so much running room now to create that. Remember, we count 4 candles back on the TD sequential. So as long as next week's candle is 1, 2, 3, below 10K, we will put in a red 4 and then so on and so forth. On the monthly, again, this is very ominous. We appear to be putting in a red 2 below a red 1, which on this highest of time frames could be signaling that the short trade can definitely be in play for quite a while, as this really nasty red candle on the 2 is basically playing out. I want to talk about MAs now. There are moving averages. Just a quick update here. Whenever I talk about MAs versus EMAs, and the big question, what's the difference? Real simple. Moving averages, it's just the moving average. You do a 10-day moving average. You just add up the price action over 10 days and divide that number by 10, or 50 days by 50. With the EMAs, we're actually taking into account more of the most recent price action, and our EMAs tend to have a quicker move based on the price action. But general charting principles using the moving averages, people look at those as well. And I tweeted this earlier in the week about how the MA 200 on the weekly chart here, clearly you can see it was breached, and not only breached, but we are still below it. We got way below it. and we're still below it. So a close on the where are we here? On the MA 200 on the weekly, which is right around $5,500. A close below that would be pretty significant. We do remember here, right, where the MA 200 on the weekly held support once and then had a higher low that actually held support again when tested a second time. Now, we've broken below our MA 200. Let me go to stamp once again. From a historic standpoint here. Oh, it's Coinbase. Oh, was I on stamp? I guess I'll go to BLX. There we go. Or haven't we? Yeah, right there. Back in 2015, 2016, again, flirted with it a couple times. I actually think, yeah, we did close a couple weekly candles right here below the MA 200, but we hugged it, right? We hugged it, we hugged it, we hugged it. We had some nasty lower wicks intra-week, but every time the weekly closed, even if it was below it, it was still very close to it. So even if we do close our MA 200 weekly candle below, it doesn't necessarily mean it's as long as it keeps close to that $5,500 area, we could be still basically putting in a similar fine support around our MA 200. Maybe we're here for several weeks, right, while we consolidate, and then can basically use this as a support to establish a new base of support, a higher low. Remember, 3,200, 3,300, okay, and then our intra wick low is 3,800. So overall, the chart is still holding higher lows, right? Until proven otherwise. Let's get rid of that there. And of course, MA 50 and MA 100 are acting as major resistance. Now on the monthly, again, let's go to stamp here. Our MA 100, well, sorry, the monthly, here's our MA 50. Again, MA 50 on the monthly, still holding support. And notice we held it here back in the 15, held it here in 19, and right now, closing above it would be helpful, which would be a close on the weekly, sorry, on the monthly, above $5,100 by the end of March, would show MA 50 support. Note MA 100 is at $2,700 on the monthly, and of course has never been tested because we're going out pretty far. So there's some technicals on that. Now I want to talk about horizontals. Okay. The term key support, I remember people talking about, if Bitcoin can close, above $8,500 and how $8,500 was, resistance multiple times, or failed support, back tested as resistance in the 18 bear market. We came back above it, we broke it below, came back above, re-achieved it. Resistance, support, resistance, we regained it as support. How important, how meaningful $8,500 was going to be in the price action of Bitcoin in the historic sense, where as long as that area can hold, then the bulls definitely have a chance for advance. And now we can see, obviously, just blown out of the window. Like, that kind of support is just gone. Everything in the sevens was gone. Everything in the sixes is gone. And now all these meaningful supports, especially in the 6K range. Remember how important 6K was to get it re-achieved, right? 6K back in 2018, if you guys were trading Bitcoin with me back then, we know how long we kind of hugged $6,000, give or take a few hundred here and there. Dip below it into the fives, just a hair every once in a while here, but still we're able to maintain that 6K. Then we had our capitulation here. This is also minor capitulation, not minor small, but minor meaning the Bitcoin miners that actually capitulated a large part of their hodl, and that precipitated this cascading event of price action here. Being able to re-achieve 6K as that support back in May of 19 was very significant. The back test, double back test and hold of support. Just a couple months ago, back in November and December of this year, was very significant. We basically showed, hey, remember 6K was major support, broke through, now it's resistance, re-achieved it, and back tested, and onward we go, right? Bull market, here we come. No, 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 no. It is now major freaking resistance once again. And that's very bad because it took us, a freaking 2 years to regain the 6K area as that support, and then to cut through it like a hot knife through herb butter is just very meaningful. That 6K was worthless in terms of that historic support. And if it was back tested, which is definitely a possibility, if we can kind of get back up here, I guess I'll use my squiggler, something like this. Any kind of back test of $6,400, once again could be just that ceiling, okay, where we wanted it to be more of a floor, right? Um, because of a fall like this, I don't expect us to, continue to crater. There's consolidation. I'm more expecting consolidation, honestly, in the next few weeks, in this area here. We have this entire candle from 4K to 8K that can be played within the inside bar of this area. And that's a situation where we have so much running room now to say, okay, we can still test these higher prices, but overall, anything below 6K in Bitcoin from a historic standpoint and how meaningful this area is, any price action below 6K is still extremely bearish, until proven otherwise. And being able to regain that 6K area and regain it with some sense of not just like, a wick above or whatever, but just knowing that, hey, this has now been tested so many times and we're back above it and holding, that is significant, and we are nowhere near that potential yet. So we got to keep that in mind. Hey guys, 74 of my closest friends watching me. Remember to hit that thumbs up button if you are enjoying my content here. Thank you for spending some your Saturday here with me. Hope you guys are staying safe, washing your hands. We are at a very unique time. And I want to talk a little bit about flights to safety, stores of value, and the stock market globally basically crashed this week. Okay, it was a crash. The gold safe haven, gold crashed. Bitcoin crashed. So the terminology, I think, for Bitcoin as being a safe haven, that's gone. There's no safe haven. Okay, when shit really hits the fan, like it's hitting right now, people were liquidating everything: their gold, their stocks, their Bitcoin, and trying to convert it into cash. The one safe haven, if you will, cash or, treasuries or something along those lines, because nothing was felt to be really very safe. And that's a situation where we are seeing take place. So everybody who says Bitcoin can be a hedge against volatile times, against uncertainty, and against inflation, which we're about to see. We're not necessarily seeing inflation in terms of price, the cost of goods yet, as the Federal Reserve keeps printing money. But what we are seeing is that the Fed can keep printing money, and Bitcoin is not the safe haven that many people, have basically claimed that it can be, and the price action currently is supporting that. So when we are on crypto Twitter and YouTube, and how many people had their YouTube shows the past few weeks that said, bull market, here we come, Bitcoin 100K, here we come, all these things here. You didn't see me do that. You didn't see me pump it like crazy like that, because my trading history, and I've been trading a little over 10 years. I've been day trading pretty regularly for the past 6, 7 years. Um, when I see charts like this reminds me of a penny stock chart. You know, you have your parabolic run, okay, you have your second attempt at it with the lower high, and eventually all these things do tend to come back to where it all began. And rest in peace, Tyler Jenks, his hyperwave, which people basically panned as complete nonsense when we were over 10K, 11K, 12K, 13K. And then once again here, hey, it doesn't seem so crazy now, does it? That the potential that Bitcoin could drop potentially that low. Um, and basically get back to an area where we get out of the full hype cycle completely and break down to lower highs and lower lows. Now we all remember. Let's see if I can bring it up here. Let's go into log auto. Okay, so lots of charts about the um, the log trend here, right? And how we were basically still riding high on our overall trend support here, and basically if we hold that right there, and we were basically saying, okay, this is the history of Bitcoin. It's never broken below our support here, and we keep hitting this upper ridge here. And logarithmically, this is kind of hold the price action of support, completely ignoring the fact that this looks like just a bouncing ball here, getting slower and lower and slower and lower. And you can see that we broke it. Like you could definitely, if you really want to go down here, but you really can't because then we kind of lose this here, right? And the meaningful area of $3,500 as support, it can't be ignored. So we have now broken this kind of meaningless chart if you think about it. How many times have this been posted that everything is fine because Bitcoin's kind of continue to follow the logarithmic chart of support? It's bullshit. It's total bullshit. It was total bullish hopium. Now, we could definitely close above it at some point, regain it as support. We could say, oh, well, maybe we're down here again and we're just ignoring all this and just using this little guy here and this little guy here. Fine, you can definitely make this fit your narrative. But no one had that. Everybody had it as the support test of 3K acting as the support of the historic logarithmic chart. And remember, we were supposed to bounce off this, trickle around here for a while, and then begin our parabolic move once again en route to Bitcoin 100K, and they're going. People on Twitter, and listen, I'm a little under 50,000 followers on Twitter. I know that's relatively high compared to some people on crypto Twitter, but it's not the number; it's the influence that some people have, and there are other people that have companies that are part of exchanges that represent exchanges that have a far bigger megaphone than I do, and are extremely bullish because it suits their needs. It suits their financial interest. And listen, it would suit mine too. Nothing would make me happier than a bullish Bitcoin, a bullish crypto market, for sure. I know that a lot of people got wrecked this week. I know specific stories of people that lost six figures. On paper of their hard-earned money they put into crypto. They believed certain people of their bullish targets in the future, and just got utterly wrecked. And why that's so meaningful is because these people probably won't come back into the space. So the mass adoption of crypto as a medium of exchange, as something that's going to basically replace, fiat currencies across the globe and be the next form of transaction. There's a lot to prove still. We saw exchanges that we know bumped up their server capacity to handle times of extreme volatility, completely failed in these times. And a lot of that is inherentness in the transactions of Bitcoin itself, where we need to figure out, and the community itself needs to figure out better ways to make faster transactions, because there are bottlenecks in the system that can happen during extreme times of volatility. I can't tell you that this is a great entry. If you scooped up Bitcoin around 4K, okay, remember what is meaningful about Bitcoin being at 4K? Well, let's talk about the liquidity gaps. This candle we had here back in April of 2019, this represented a liquidity gap. We basically went straight up without back testing, finding areas of support while maintaining that higher low, and we have filled that liquidity gap, and that was definitely meaningful. Check plus. Okay. But what is also meaningful is that doesn't necessarily mean that that basically constitutes the bottom. Okay, back testing this key area here of $4,200. Remember, this was a stop and reverse area in 2017. It was our ascending triangle, right, in 2018, right? And the back test of it and the very nice bounce so far, right, from that is definitely meaningful and definitely significant. But I still cannot ignore, and this is just from my history of looking at charts for years, and especially charts that had parabolic moves. Um, there are other liquidity gaps lower that were never really truly filled. And I don't want to hear people, although I'm sure I will, saying that Bitcoin could never get down to below 3K again, into the 2Ks areas again. I think this week's candle really can truly prove that anything is possible in Bitcoin price action. And the fact that we blew through our entire 2019 bull market in a week really does prove that meaningful areas of supports and areas that that will never fail again or never break again has been proven to be nonsense. Okay, just pure nonsense. And I think this definitely humbles a lot of people. Let's talk about this triangle here. Okay, we had this triangle apex form. Okay, resistance, support, resistance, support, resistance, and then boom, we've broken through it. So this triangle where we were supposed to go this way did not happen. It was quite the opposite, actually. This is meaningful because this consolidation, normally you like to see consolidations to expansion. We have a triangle here. We have a pennant, right? And our pennant broke bearish, not bullish. This is meaningful because this was a setup that took years in the making only to fail, or not fail, but only to go below the bearish trend lines here. This is significant. Now let's talk about parallels. I'm a big fan of using parallel channels. Okay, and we can go all the way down here to our highs, and then our low here. Actually, if I extend that, we can see we actually, right there, some history here, and let's go a little higher here. Come down. There. You can see we are right there trying to hold middle channel support here. Okay, this is a support channel that just using this particular parallel, okay, it'd be interesting. $5,300 would be a notable area of support. We'd like to find that on this weekly candle chart here, okay? But see where the bottom can definitely take us if we reciprocate these lines here. We can use parallels in multiple directions as well. Let's see, which one do I want to do? I guess if we just use the small one here. All right, so let's see, what else do I want to talk about? Let's look at some oscillators. We've done a lot of indicators. We've done a lot of um, horizontal supports, channels, and whatnot. Let's blast through some oscillators here. Chalk and money flow weekly, very bearish here. We have failed to hold that middle, that zero line there. We are below it. That is very bearish. That is not good. That is resistance. Look how far our OBV fell. Now we have found some, or at least we're riding in this area. Okay, there's a lot of history here in our OBV, and we are there once again, right? So this is a meaningful area and a cluster where we would like to find that historic support. Weekly RSI, yikes. Again, we look to find support hold above 50. Okay, 50 can be a bullish uptrend. We are down to 33. We're probably actually a lot lower intra-week there, okay? Now, I want to go to, let's go to BLX here just again, because let's look at this in historical context now, okay? Our weekly RSI can get as low as 27, right? We did it here in 2015, did it here in 2018. So we have historic running room to go lower on our weekly RSI. And that is notable. And you also note that when we broke our resistance, or when we hit our resistance here at 80, we could be targeting a weekly RSI support of 20 because of that. Okay, and if we got a weekly RSI down to these levels here, that would be actually a much more meaningful to me bottoming area. I do not expect 28 as it did twice here to hold. 3 times a charm? I don't think so. I think we break through this if the RSI on the weekly does get that low. Weekly stochastics, okay, again, once we were up here for a second time, this was a bearish situation here. The rollover here was weeks ago in the making and has been playing out thusly. We have lots of running room down. Now, I will note that our expansion of our leading indicator is significantly lower than our trailing one. And we need to keep this into perspective. When we get too extremely separated, okay, we do tend to see a bounce to get this caught up. Okay, so we're very wide here on our blue to our orange here. And that tells me the extreme that we're currently in and that this might slow down. That's why I don't expect us to go crashing down or blasting up anytime soon. I'm expecting probably several weeks of consolidation in the 5K area, maybe as low as in the upper 4Ks. Maybe we can touch above 6K one more time. Look at our squeeze momentum here. We are clearly rolling over our mountain here, quite a small mountain here. You can see our big mountain, smaller mountain, smaller mountain, still in the green, but definitely this is kind of over the next couple weeks, probably bring us back down to our red trough once again. So on our weeklies here, we are basically seeing the rollover continue as we expected. I want to go. Let's go to a little higher time frame here. Let's talk about the daily chart here. Okay. Now let's talk about yesterday's candle. So from a pure charting standpoint here, we're looking at this candle here. This is a very bullish looking candle, okay? It does have the characteristics of a bottoming hammer, a very long lower wick. What's more intriguing to me is the volume as well. We like to see bottoms created with tremendous volume, okay? Here's our capitulation candles here. There can definitely be an argument that this is capitulation volume. We have the break, we have the next day, which we have our lower low, followed by a very nice bounce. But again, we were so oversold extreme that we have to say, okay, maybe this is a nice bottoming for the time being. Okay, Bitcoin under 4K was bought up rather quickly. We like our shape of our candle. We like our volume profile. We like how we did a nice V here on the OBV. We did a nice V here on our chalk and money flow. We did a nice bullish cross here on our stochastic. And we did a little bit of a V here on our RSI, but everything is still weak. Look at our daily RSI. Okay, hit resistance at 26. This is weak. This is a very weak RSI. Okay, even though our Stoch on our daily has found a little upward momentum here, it's still very, very weak. We have a chalk and money flow that is below our zero line. This is still very, very weak. We have a squeeze momentum indicator that's putting in a quite deep bearish trough. And not only that, breaking all the lows we have seen from 2018, 2019, all the way back here. No, we can see what our extreme lows can be on our squeeze momentum. And you can see potentially we can have running room significantly lower. But even in these extremes here, we do see we get quick snapbacks, okay? This isn't much of a snapback yet. Even with our nice candle yesterday on support, there's no change here. There's very little in the oscillators that is saying that this was a directional change, and rather than just a meaningful bounce on extreme oversold conditions that we do tend to see when we hit these extremes. Let's look at our Bollingers now on our daily. Lower Bollinger is acting as resistance. This is notable. Our EMAs are just bear crossed and hold. Remember, we had the signal. We had our signal. Here was our bear cross, February 26th. Bitcoin was at $9,500. We back tested, and here was our resistance at $9,100. Okay. The EMAs were telling us, watch out. Okay. We are in a bearish EMA pattern here. And boy, did that play out. So our EMAs were saying, look out below. Our Bollingers were saying, hey man, we're hitting middle Bollinger resistance. We did it on the weekly. We did it here on the daily. We can't get above our middle Bollinger, and look out below. And sure enough, that's what happened. Now our dailies are extremely wide. I mentioned the shark mouth open. Look how wide our daily Bollingers are. Basically rivaling our bullishness spread. We can see our bearishness spread here. So this is significant in that context there, that we are in the extremes. And that's why I think we probably have weeks ahead of us of some sideways price action, 1,000 up, 1,000 down, to allow our overextended oscillators to tighten up once again. This shows how monumental this was. We are on a red 7 here. So potentially a couple more days of bearishness, and we still have the sense of our oscillators here, of our TD, to complete that 9 cycle. Notice how the 9, man, that literally called the top there. On our situation, that literally called the top on the 9. Look at that. That was the 9, 10-5. I mean, just there it is. Short the 9, then you would still probably be in your short. Tremendous. Okay, tremendous. We are significantly below all of our meaningful daily moving averages. The cluster of them is way up here. Okay, they're still above 8K. Okay, and we're down here at 5K. So these haven't even begun to turn yet. Okay, they haven't even begun to turn lower yet. So as I said, this is telling me we probably have weeks ahead of us for our moving averages to begin to come down and our price action begin to kind of meet them somehow, where we're going to have some, hey, how's it going, and see if we can then find some support on these guys here. But this move is telling us that sideways is probably the key for quite some time. And if you think this is the bottom, you probably have time to decide if you want to dip your toe in. Now, what happens in the weeks to come, okay, if equity markets around the world continue to fall? Okay, what happens if the Dow goes into the teens? Okay, the S&P goes into the 2500, 2400, 2300 area. We have yet to see any bullish hedge of Bitcoin hodling during these extreme times of bearishness on equity markets. Until we see that divergence, until we see equities fall and Bitcoin not fall, okay, it is very possible that Bitcoin can run in tandem with the Dow and with the Nasdaq and with the thing here. We can see this is the Dow Jones. This was the week it was. This is where we are here. We have broken through our lows of 2018. Okay, little pop on Friday, but we historically speaking, when we do see a bear market, let's go back here to right here, some of the biggest price movements bullishly in Dow history was during the bear market of 2008 and 2008 and 2009. Where we had face peeling, bullish rips, right? Only to then put in lower lows. And we did have a V bottom here when we had just a full capitulation finally. And our last lower low, 1, 2, and then the third one there did mark the bottom. And then 10 years of bullish uptrend did ensue. So my question remains, if Bitcoin is clearly a not a risk on asset when everything else is falling, we have to assume that if the overall equity markets continue to fall, you know, I don't see why Bitcoin would hold up really any better. People are looking to any flight of safety they can find, and crypto assets right now are not those. Now, we're going to see more volatility in Bitcoin and crypto. We saw big bounces in ETH and Litecoin and Link and a couple other ones here, 30% moves up after being down 50%. This is what crypto is, very quick moves. This is how it is. The volatility is much more extreme in crypto. That's why as traders, we kind of enjoy that. But I do not see anything that tells me Bitcoin can be a hedge against global markets continuing to fall. And next week's price action in the Dow, if we're able to hold things up, if we're able to find supports, if we're able to keep some sort of stabilizing area in the 20,000s of price in the Dow might allow Bitcoin to continue to find this area of support here. The bullish hope for Bitcoin is that we can maintain our higher low. It is very important that we maintain our higher lows. Now, a lower low isn't the end of the world. Okay, a lower low can definitely take out all the speculators and really, and this is really sad to say, but sometimes you need to break it all really, to establish an area where, oh my God, I can't believe Bitcoin's so low. I'm gonna put my toe in no matter what. Until we can get that kind of situation where the selling dries up, because either the Bitcoin price action seems like it's so low, or people are willing to hold through extreme volatility because they feel that a higher time horizon will yield this as a good entry for sure. But unfortunately, Bitcoin is definitely tied now to the overall equity markets of the world until proven otherwise. I want to talk about my Ichimoku cloud. I'm a big fan of Ichimoku, especially on higher time frames. We can see once we fail to hold cloud support here, this was a telltale sign. Our 3-day, the same deal. We have now reversed to a bearish Kumo twist. Our weekly, once again, I remember I tweeted this the day that it happened. I said, look at this here. We have retouched and got rejected at the top of the cloud. And look at that. That was our top, just as this was our top here, okay? don't ignore the cloud. My cloud settings are adjusted 20, 60, 120, 30. These are the ones that I prefer for crypto. And looking at our monthly, I think maybe we have on BLX. Yeah, on BLX, you can see we just touched our Chico span here, but there still really isn't enough history there on the monthly at the highest time frame there. Um, but look how much lower we are. We broke all of our Tenkan Sens and our Kaijin Sens, and this is still a very bearish weekly cloud where we're actually expanding our cloud resistance here into the future. 83 of my closest friends watching me today. What's up, Justin Dart? What's up, Adit Sharda? What's up, Probably Not Paul? What's up, Super Boy? What's up, Ahmed Vevo? Um, Nej Dai. What's up, Darius Souza? What's up, EL Pistol 667? Thanks, AD. I really appreciate it. What's up, Alex? How's it going, my friend? You guys are having a good Saturday here. I, as I said earlier in the show, I've been on crypto Twitter for 2 years. I don't really know what I want to do with my Twitter account. I think this is a time right now for people that want to get just some clarity in the market. I think people that have been following me for a while know that I'm definitely not a pumper. I'm definitely not someone that just throws out bullish charts consistently. I'm sure if I was very more bullish on Twitter, I'd probably have a lot more followers and get a lot more interaction. But that's not what I see here because I'm a trader. You know, I've been trading stocks for a while. I know what I'm looking at, and again, nothing would make me more happier than to have bullish Bitcoin. You know, from a financial standpoint, my friends, my influence on Twitter and YouTube, but I really want to try and be as realistic as I possibly can about what I'm seeing. And I know a lot of people got wrecked this week, and I really feel bad about that. I hope that people. Learned that you can't just follow some avatar on Twitter that's saying this is bullish support and we're going to the moon here and we're about to get rich on altcoins or whatever. If this is what happens in Bitcoin, how many altcoins are out there now? 3,000, 4,000, 5,000. These are something that we need to basically keep in mind here, that this is still a tremendously risky asset. It is basically proven this week that it is not a safe haven. Gold has proven this week that it is not a safe haven. Blue chip stocks have proven this week that they are not safe havens. How many of those blue chip companies bought back their stocks, to prop up their stock price at much higher prices than they currently are now? What's up, Dragon? Um, so I just want to just keep that in mind here, that as we move forward in the future of this here, that we need to have a sense that anything can be possible, that meaningful areas of support, what we thought were support, can be thrown out the window quite easily if the market decides to do that. And I would say that Bitcoin really needed to stand up and deliver in the past few weeks here. It definitely gave itself an opportunity to show it that, hey, it can be that safe haven. It can be that area where that asset that can show that, hey, I feel comfortable. I can sleep at night having my hard-earned money in this asset and not worry that it can basically be, wiped out overnight. And one thing about crypto is that it is 24 hours a day, 365. If you are doing leverage trading or trades of any kind, it is so important to have a stop loss. And I think people were underestimating how low things could really go. They weren't using stop losses, and then they just got utterly destroyed. And I feel bad for those people, and I feel bad for them because they put a lot of trust, unfortunately, in some of these exchanges that are underregulated. that they don't have any recourse on when exchanges just freeze up, when they go offline, when you're not able to be comfortable in your position, when your stop loss doesn't get hit, when you get slippage, and your stop loss that was supposed to keep you safe. It just kind of goes flow out the window. This basically shows us that crypto really isn't ready for the big time yet in that context. That there's still lots of things that really need to be thought like that. All right, I want to talk about the halvening. The halvening, not the price halvening, but the actual halvening, where basically the block reward for miners gets cut in half. Every block a miner mines, you get 12 Bitcoin. After May 12th, 13th ish, that will be cut in half. Now, the inflation rate for Bitcoin will be cut in half, and we'll have an inflation rate of Bitcoin somewhere around 2%. Now, this is a very positive thing. This is actually a bullish thing for Bitcoin. Generally, inflation around 2% is actually reasonable. But we can see as well that there's plenty of Bitcoin out there on the open market. We still have 18.5 million Bitcoin floating out there. There's probably a couple million Bitcoin that are probably lost forever. Early miners that didn't think too much of it, had it on some hardware somewhere, some hard drive somewhere, and threw it out, and all that stuff. Lost wallets, lost keys, all these things. So there's probably less than 18 million Bitcoin actually there on the open market there. If you wanted to buy Bitcoin, there's plenty of it out there for you to buy. But the valuation of what that Bitcoin price is, that is still very much up in the air. If you were bullish at 10K, are you not bullish at 5K? If you don't want to dip your toe in here, and listen, I don't have a HODL position. I probably have less than a Bitcoin total in my entire, a few accounts here, a few accounts there. I have a couple bucks in some altcoins, but I was never really comfortable holding a large amount of my money in crypto just yet because of the fundamentals of the chart. And the fundamentals of the chart still tell me that the hype cycle of 2015, 16, and 17 still can be unwound. And that meaningful areas of support where, Bitcoin could never drop below that, are just kind of meaningless. The bounce we had here at 3K back in 2018 was wonderful. It showed we could basically find historic resistance, turn support, back test it, and advance from it. But having come all the way back to where we are now, kind of shows, wow, maybe this isn't the most meaningful support, and maybe lower areas can be assigned. I want to do a couple more. We're reaching an hour here. So let's talk about John Fibonacci. So high to low, golden pocket, stopped out Bitcoin, little under 14K. Okay, we blew through the 236 support like it was nothing. Okay, so now we do the inverse of this. We see where we were from the lows of 3K to where we are now. We blew through the 786, the 84. Now closing it right above the 786, which would be around $5,400. That could be something. We definitely wick below it, right? Probably got down to 93, I probably. But the fib supports of this are kind of blown out the window. They're kind of blown out the window. Finding meaningful supports in that context based on this candle is kind of bupkis. Can we use a more meaningful situation like this? It's so hard to basically use any kind of a longer term fibs based on the fact that our retrace of this candle has brought us below the bounce area we had in 2018. We basically gave up all of 2019 gains in a matter of weeks. Okay, so all those fibs kind of get blown out the window, and what are we left with here? We're left with horizontals. We're left with, here was our um, low, here was our area we wanted to hold. You can see our historic cluster. We got a lot of history here, obviously, in this area. A lot of history in this area. Okay, we just touched this area. And remember, on the weekly, when we get into this area of $35 to $5,500, we do spend weeks here. 1, 2, 3, 4, 5, 6, 7, 8 weeks here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks here. So we could be in this area for some time, potentially trying to establish another area of consolidation. But as I said earlier, next week and the weeks to come of the overall global equity markets will be quite telling as to where we can achieve from that. I did want to briefly touch about CME. I'm a big fan of charting CME price gaps on the 4-hour chart. I will quickly discuss why the 4-hour is my go-to. There was a gap here, started January of 18 at $13,800, and it was open. And I remember thinking all the way down through here, I'm like, oh, there's no way Bitcoin could ever fill this gap at $13,800. And it took 526 days and 19 hours for the gap to be filled. And not only did it fill it, it literally marked the top of around a little under $14,000. Remember, CME does not go spot to spot with Bitcoin price action. Sometimes it's above a couple $100. Sometimes it's below a couple $100. There are 3 meaningful gaps now on the 4-hour chart: $3,500, $9,100, $11,700. These are 3 4-hour gaps in the price action that I expect all 3 of them at some point in the history of Bitcoin to get filled. When we were up here a couple of weeks ago, literally just a couple of weeks ago, the sense of closing the 11.7 gap definitely seemed reasonable. We needed a little more push there, but I figured this was definitely the time we were probably going to fill that gap there. Not the case. We opened with a big gap down on this week down here, and the gap at $9,100 was created. Our gap here at $3,500 has been open for over a year. Okay, so these gaps don't have a time limit, as we saw here. This one took a year and a half to fill. Okay, but now that we're closer to the $3,500 gap here, I'm now assuming that this one will probably have the better chance to fill first before these two do. And because it can take years to fill these, it could take years to get back up here in Bitcoin's price action. And we'll see where we open. We closed at $5,300. CME opens tomorrow, tomorrow evening. So we'll see where we open tomorrow evening. We could actually have another gap open up indeed. I believe all gaps on the 4-hour CME at some point in history will be filled. And $3,500 is closer to where our current price action is. So that's what I'm seeing in the charts there. Guys, this is Big Chonis. I hope you enjoy my content on this Saturday. Hope you guys definitely can stay safe out there. I definitely want to, I keep saying this and I've been kind of slacking on it, but I want to do more of these videos for you guys. I want to do a little more activity on Twitter. I sold my house a month ago, and I've been trying to get established in the new place I'm living and kind of get a sense of where I want to take my life from here. I'm a single guy, never been married. I don't have any kids. I got a mom I take care of, and I got some close friends, big cheds, and others that I like to, talk crypto with and talk trading strategies with. But I want to do some more traveling this year. I'd love to reach out to some of you guys that are across the world, and potentially if I'm kind of visit your countries, would love to, have a beer with you all. So we'll see if we can survive this corona, and potentially this summer I can do some traveling and meet up with some of you guys, and because I'd love to meet you and love to learn about you guys and talk crypto and trading strategies. And listen, as a trader, we look for opportunities, we look for oversold bounces, we look for extremes on both ends of it. Um, the opportunities in crypto are definitely there. The opportunities in stocks and trading are definitely there. But I think this week definitely humbled a lot of people. Unfortunately, a lot of people probably got wrecked, and very few people probably made a fortune this week. Being able to short properly, know how to manage risk. I'm fortunate in the sense that I didn't have a lot of over leveraged money in crypto. I was always very hesitant to buy the hype, because I didn't get into crypto until, let's say, Bitcoin was over $1,000. So I don't have a historic hodl position in the low hundreds that I can just keep and not worry about. Um, I wasn't gonna basically go all in, and that I'm happy I didn't. I'm not anywhere close to thinking that I feel comfortable, going all in now, because of the uncertainties of what we are going to face in the days and weeks to come. But I hope to be a guide and share my thoughts and ideas, and we'll see what the weeks and months ahead will take us. But I still like trading crypto and all other assets. And what I've learned in my decades of trading is, expect anything. I've seen it all. I've seen tremendous moves. I've seen hundreds of dollars turn into hundreds of thousands of dollars. And I've seen hundreds of thousands of dollars turn into hundreds of dollars. I've been both sides of the coin. I've seen it both. And that's something that I can definitely say I have learned from trading, as long as I have, is that expect anything. Anything can happen. Black swan events do happen. I think we're in one right now. And when these things do happen, opportunities can always be found as long as you have a good time horizon and are not overly leveraged in what you are basically putting out there on exposure to these assets. Until next time, this is Big Chonis. We'll talk soon. Please hit that thumbs up button. Please give me a follow. Please check me out on Twitter. I will continue to be there for you as you guys have been there for me. Until next time, Big Chonis, love you. Stay safe. Wash your hands. Peace.